Hello, everyone. This is Damien, and welcome back to the Options Professor podcast. Today is Friday, October 16th, and I'm going to go over the recap for my trading week. So this week, I had 9 spreads. 8 of them were profitable. 1 I took for a loss early just to manage risk. And let's get going through them real quick here. Zoom, ZM. And so this one I had 2 different spreads on. I entered them either early in the week, Friday or Monday, but what I was looking at was really the 50 moving average hovering around 480. So at the time, the 50 moving average was hovering around 480. I decided to sell the 440s because I was getting some pretty good premium. So I sold a 440, 435 put for decent credit and ended up closing this as it started to run through the week. Wednesday, I believe, I closed this off and I managed to collect a 26% profit. And I did a debit spread. So the debit spread, I ended up purchasing the 490 calls and then selling the 505, I believe, either 505 or 500. 505, because I got the line here. It's what I saw here was this box, this range, and I thought that it would either stay in this range towards the top or break out. And sure enough, it broke out. And this gave me the opportunity to close it Wednesday or Thursday for 55% profit. So Zoom gave me 2 different types of trades, a credit spread where I sold for credit, collecting 26%, and then a debit spread where I potentially could have actually made close to 100% had I just been patient, closing this out for 55% profit. So 2 very good trades in Zoom. The second trade I had this week was Tesla. And Tesla was hovering around, about mid last week, was hovering around 425. And so what I was watching was the 50 moving average. And as it hopped over this 50 moving average, which was about 425, I thought this would be a good chance for it to potentially run up into earnings. So earnings is coming up next week. And sure enough, it did do that run up. But late last week, I decided to sell the 420 puts. I think I did 420, 415 put spread. And very much like Zoom, I was thinking about also doing a debit spread so that this would run up to 450. I didn't actually make that trade. So the 420, 415 was a little bit more aggressive of a credit spread. I did tell some of my students that if this was too aggressive for you, you could potentially look at, reducing the amount, the aggressiveness by coming down in the strikes. And I know that some of my students end up doing 400, 395 for less credit. But I did the 420, 415 put spread, ended up selling it Wednesday on this jump up to 460 and managed to close this out for 78% profit on the credit spread. So that was a really nice, aggressive play going right after the 420 level where the 50 moving average was. All right, the third trade I was in was PINS, PINS. And as you can see here, I drew my line in at 43. That's because I ended up selling the 43 put. I did a 43.40 put spread. And that was Friday as it looked like it was going to stay above this 50 moving average. The 50 moving average ended up being around 44. So I ended up getting into this and then closing it out for a 15%. I closed it early because I wasn't too sure if it was going to hold this level. So I took a 15% profit, as it looked like it was kind of maybe going to cut back to test the 43, but very happy to take a profit there. Next was an overnight. I didn't expect to hold this one just overnight, was GME. And I was, caught some news, jumped up, came back to a fib retracement level, and decided here to get into some 12, sell a $12 put spread. So $12, $11 put spread, or $10 put spread. I can't remember exactly, but it was a $12 level that I wanted it to hold. The next day, it made a big push all the way up to 15, and I managed to get out of this. I didn't have much premium left in it to run into next week to decay, so I decided to just close this out and collect a 47% profit. Okay, so this was just overnight. I did this Wednesday. I saw the move into Thursday and then got out on that move. Nike, NKE. So Nike was sort of holding this 128 level. 128 level. When I made this trade, I honestly thought it would potentially even just stay above 130. So I decided to do the 128. I saw the 50 moving average just moving up. And then when I decided to take this trade, I thought 128 was a very good level for it to hold. So I did a 128, 125 put spread. And I did hold this up until today. So if you take a look at the chart, what happened was it broke the level. It came down to 127, even hitting 126 before coming back above 128. And today I noticed that it had problems keep holding the 50. It was almost like rejecting the 50 moving average. So I got out this morning before there's any risk of this dropping back below 128. And I managed to lock in 11% profit. Now this eventually closed right at 128. So we could have been close to max profit. I don't think I would have let it expire worthless with this hovering so close to 128, even dropping below today. I probably would have closed it out, but I would have liked to close it out with a higher profit percentage. Obviously 11% is still very good returning your money in 1 week. All right, I did 2 trades, which I call them test trades because I didn't go very big on them, but I was looking at how these charts set up. So TDOC is really one of them. I did a debit spread here, and I recognize that it was, again, trading inside of this range, which was 225 on the top side. You can see my lines here, and then 220 on the bottom side, and it was just riding inside of this range. So what I ended up doing was doing a debit spread for it to either break out to the top side or stay close to the top. And it did break out. At this up here, I had a chance to actually lock in 50%, potentially even 60%. I could have locked in 50% profit, but I didn't. I thought that if it stay up here, I could probably lock in about 80 or 90%. And then as it just faded today, I decided to close it so that I didn't get into a loss scenario. But yeah, this is just one of the trades where I just held on too long. I ended up closing this out for 12% profit. Still good, but it's not the 50%, right? This is just a test trade for me. Obviously, I'm going to learn from holding on to this trade too long and letting some of that profit go. LVGO, very similar situation. I saw it inside of this box. At the top side, 145. On the bottom side, 140. And, I was really watching this, hoping that it would break out to the top side of the box, and it did. Again, I had another chance to lock this in at about 50% profit. With 2 days left to go, it was above the range of my debit spread, but I didn't take it. It did the same thing as TDOC. I let it fade, and I still luckily closed this out before it went to loss territory for me. And in this case, I locked in 15%. So again, I'm not terribly happy, but also not disappointed. Could have had 50%. should have taken the profit, but 15% is still a good return on your money. Now, the one trade that I did lose money on was really me closing this out early because I had this running into next week. And Palo Alto, Wednesday, I had opened a credit spread for it to hold the 250. So I wanted it to hold the 250, and that was below the 50 moving average. And on Wednesday, it looked pretty good. Unfortunately, Thursday happened, it dropped below the 50 moving average, and then today happened and it just broke all the levels. So now it looks like it's holding the 200 moving average. I did not want to carry this into next week, potentially ending up with a 100% loss. So I took a 47% loss on this one. It's manageable considering all the wins I had this week. Still leaves me up for the entire week and takes some of the risk off of the table going into next week. All right, so that wraps up my week. It was a really successful week for me. Going into next week, I'm going to be a little cautious given that we are coming up onto the US elections and the market seems really choppy. I do have some open positions that I'm carrying into next week, but we'll talk about those on Sunday. Thank you for tuning in, and I will catch you on the next podcast.